Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. But with that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Scott K., Mark R., Brian B., Jackie A., and Ray K. On the program today is a returning guest. Mr. Murray Hill is back with us to update. Murray is the Managing Director and CEO of Elevate Uranium, a Namibian-focused uranium project developer and exploration company, advancing various stage projects, including its core Koppies uranium project in the Orongo Uranium District of Namibia, which hosts in all categories uranium mineralization totaling 66 million pounds, averaging 192 ppm uranium. The company also has exposure to Australian uranium exploration projects in Northern Territory, as well as Western Australia. Elevate Uranium is listed on the Australian Securities Exchange under the symbol EL8, as well as on the US OTC markets under the symbol ELV. UF. Murray, welcome back to the program. Good to have you on.
Yeah, good. Thank you for having me back. Yeah, it's nice to be here.
Yeah, Murray, good to have you back on. And we were just checking the calendar, and it looks like we're right at a 1-year anniversary since you came on to update last. So welcome back to the program. Lots to update on. Well, why don't we get right into it here and talk the first update that we have here on the list to discuss with you most recently. You guys just divested of the Obaguma project in Western Australia. Talk about this deal and the rationale for the divestment.
Yeah, look, the Ubaguma is up in the northwest of Western Australia. It's touted as an ISR project. It's non-core for us. What we consider core is where we can make a big difference with our upgrade process and our know-how and IP. It was just it's not near our other projects. So we just thought that the best thing we can do is, we haven't given it much love over the last sort of 4 years, and we've been concentrating on Namibia. So Orpheus came along and sort of said that you want to divest it, and we said, yeah, sounds fair. We get a percentage of Orpheus as a company, so we have an interest in Ubaguma still, but we know it's a company that's going to put a lot more attention to it and give it a lot more love than we've been giving it. So we're quite looking forward to what they can do with it.
Murray, thank you for that, and good to see you guys are working that end of things. You guys have really acquired quite a large portfolio over the years, and as you guys go through and news events come up, discovery happens, you guys tend to refocus and get into the core projects and the core strategy, and obviously some of those projects then become not material to the company going forward. So good to see, and good to see someone else taking that forward and you guys maintaining an interest there. Well, why don't we move into Koppies, the main project of the company. You guys announced back in late July that you guys had shipped the upgrade pilot plant to Namibia, with the pilot plant setup work set to begin around November. Talk about the planned field work, the work to be done there, as well as when the market can expect first results from this pilot plant work.
So the pilot plant, yeah, it was we constructed it under budget in Perth. It was due to be shipped in July. Unfortunately, the shipping line that was due to pick it up didn't dock in Fremantle to pick it up. So, and it's still sitting on the water now off the coast of West Africa. So, unfortunately, maritime industry at the moment is not that predictable and not on schedule. So, we're about 5 weeks behind schedule getting it to Namibia. So, we're expecting to have it set up mid-November and operating shortly after, and have a few runs before the Christmas break. Unfortunately, like most countries, Namibia has that sort of month off at Christmas, much like Australia does. Give everybody a chance to go and recharge their batteries. So we'll probably have 3 weeks of running maybe before the Christmas break. Try and get some results out of that, but then come back mid-January and run it for a good period of time, 2 or 3 months, just to make sure we get the results we're after. Basically, the pilot plant is designed to prove the upgrade process on a continuous basis. So it's going to run at about 60 kilograms an hour. It'll be taking feed direct from some test pits we've dug out at Koppies. our metallurgist that designed the pilot plant is now living in Namibia with his young family and getting set up ready for the pilot plant to arrive. So when it arrives, it should be a fairly quick process to get it assembled and operating. He's already employing some staff ready to go. We're going to employ about 35 Namibians to run this pilot plant. And yeah, as I say, it'll prove the upgrade process on a continuous basis, and then that will lead into a study. So we've already engaged a study manager, and they're currently reviewing the data package we gave them, and also reviewing the quotes from engineering groups. We'll select an engineering group over the next 1 or 2 weeks, and then appoint them, and they can start to do some trade-off studies. Like, we're suggesting that it's going to be surface miner that digs, 0.5 meter thick cuts, and will feed straight into a scrubber. So it doesn't need crushing, doesn't need blasting, but we still need to sort of compare that to the conventional drill blast, much like other mines do, and just see how that goes. So we think we know where we're going to go in a lot of these areas, but we just want to do some confirmation, I suppose, to make sure that the trade-off study is giving us the correct answer that we thought we are going to get. So there's a number of those that they can work on. They can work on infrastructure. We know the flow sheet anyway for the upgrade process, so they can start to work on it, work out the optimum throughput rate, and then as the pilot plant results come forth, they'll be fed into the study. So we're looking at finishing the study by the end of June next year, and that will give us indication of what the costs are going to be, both capital and operating. We've been saying for a long time that it's about 50% capex and 50% opex versus conventional processing. So we're looking forward to just seeing what that really is on the Koppies project. But at the same time, still doing a bit of exploration around Koppies itself. The Koppies project picks up Hirabeb, which has got a 10 million pound resource, and it picks up Namib 4. So the southern edge of Koppies is only 10 kilometres from the northern edge of Namib 4. We've got a mineralised envelope of about 11 kilometres by 7.5 kilometres at Namib 4. We're doing some infill drilling, sort of trying to understand what drill spacing we need to estimate a resource on it, a maiden resource. And at the same time, while we're assessing that, we're doing some drilling around the edges, and we continue to see expansion of the mineralisation further northeast, heading towards our other tenements. So it's actually quite exciting what we're getting and what we're learning from exploration outside of paleochannels and in this weathered basement, which is a very, very similar style of mineralisation to a paleochannel, and we expect the pilot plant to work the same on that weathered basement as it does on a paleochannel. But it means that we're not just looking at conventional paleochannel exploration, we're looking at a little bit outside the box. Paleochannels are easy enough to find by ground-based EM or airborne electromagnetics, but the weathered basement is difficult to find. So we're having to sort of think more geologically and work out how we can find these resources. And we certainly learn a lot from Koppies, where we expanded the resource from sort of 20 million pound in the channel to 56 million pound in that resource, with 36 million pound sitting in weathered basement. So that's taught us a lot to apply down at Namib 4, but also in our other tenements in Namibia.
So it looks like we've got a couple different production scenarios envisioned that all include upgrade. You would have the surface mining portion of that. You would have the conventional project there, both in a fully built out project with processing all on site, and then you would have some
let me just pick you up there. That's the comparison. It's a trade-off between conventional versus surface miner. We think surface miner will win because it's a lot easier process to manage. So it won't be both of them; it'll be one or the other. But I'm very confident it's going to be surface miner. But we just need to make sure that, me being confident versus actual numbers can be two different things. So no, it won't. It'll be one or the other, not a mix of both. Sorry.
Okay. I was just looking at the various potentials here of what you can do, and then you have, of course, on-site full finish, or the potential to take material somewhere else after it's been upgraded. So definitely there's a number of different options, I suppose, that would be on the table for that.
Yeah, let me just expand that then, Andrew, that we can produce a concentrate of less than 5% of the mass. So as you point out there, you can either leach it on site in an acid leach environment, or you can take it off site. So one of the beauties of upgrade is that, let's go back to the ore in Namibia and calcrete ores around the world. They're full of calcite. So calcite consumes acid, which you generally leach these ores in. So it consumes so much acid, it's uneconomic to leach them in acid. So you then have to go to an alkali leach. Now, an alkali leach is at 92 degrees Celsius versus an acid leach at ambient temperature. The kinetics of acid is like 4 to 6 hours on carnotite, which is what the uranium mineral we're mining, versus about sort of 24 to 36 hours with alkali. So you can imagine it's a lot bigger circuit. You have to have a lot more temperature in it. But at the same time, the Koppies resource, 50% is within 7 meters of surface. So it's really, really shallow. But the top 3 to 4 meters, or 25% of the ore, has high sulfate in it. Sulfate consumes the alkali reagent. So you can't then leach the top 25% of the Koppies ore in acid or alkali going down conventional routes. So you need upgrade to then, what it does is it takes out, it concentrates the calcite and throws it away. So this concentrating gangue minerals is counterintuitive and innovative and hence patentable, which is why we've got 3 patents around the world on the upgrade process. So once you pull the calcite out, now you can go to an acid leach, which, as I said before, is ambient temperature, really fast kinetics. And it doesn't really matter what happens to the sulfate, because the sulfate mineral, when you go into a dihydrogen sulfate leach, which is sulfuric acid, the sulfate doesn't matter. Even though we remove 80% of it, it doesn't matter. So now the top 25% of the ore comes back into the resource. So you're getting that benefit of getting more resource being processed, but then you've got a low acid consuming concentrate, which you can leach on site in your very, very small leach circuit, or you can truck it off site to a third party. Now that third party, there's a number of operations in Namibia. We look at Rossing, have been operating since 1976. So that's 49 years of continuous operating, longest running open pit uranium mine in the world. And we've got Husab there now who are producing. So, there could be those available to us at third parties, or we could take our concentrate from one of our projects, say from Marenica, down to Koppies. So Koppies could be the center of gravity for our processing facilities in Namibia, and we produce upgrade concentrates from elsewhere. So a sort of hub and spoke approach. So that gives us optionality, as you said before, as to do you leach it on site or do you take your concentrate to another site, whether it be a third party or one of our other sites. So it really opens up the way we develop our projects. It brings a project closer together. And it also means that we can likely develop smaller projects than our peers. We've always thought over many years that you need at least 30 million pound resource to have a standalone refinery producing yellow cake. Now, if you've only got 15 or 20 million pound, does it work? Well, if you can produce a concentrate from a beneficiation circuit and take that concentrate to a third party, of course it'll work. So it really does change the development pathway that we have for our projects in Namibia, and as I say, it brings them all closer together. Sorry to interrupt you there.
And I appreciate the flavor on this because, you look at this, you look at the potential there, the whole mineralization of the deposit area. Certainly you can look at more conventional means to go after all that material. And then in a market condition, Murray, where you would expect too that it would at some point, depending on the phased approach to the project potentially, that you would want to go after all that, especially with the market conditions that we would expect going down the road here in the years to come. So it's always interesting to see how you guys want to approach that and maximize the value, I suppose, from the deposit as it stands today.
Yeah, exactly. A processor can, bring all that shallow, high sulfate material back into resource. We know some of our peers in Namibia, they're losing 20 million pounds because they can't process it through conventional processing. That's a lot of your resource gone. So we're really, thinking outside the box, making sure that we can really add significant value to our projects. But when you go back, when I started, we only had the Marenica project. It's really low grade. What do you do? Do you be innovative or do you drop it and walk away from it? So we sort of were innovative, and now we've got this process that we think can add significant value to both Namibia and our Australian assets.
Absolutely, and I think looking at the grade, I think it falls in line generally with a lot of the peer deposits in Namibia. So definitely, it has some good potential here going forward. And with that, Murray, why don't we talk just briefly, look ahead schedule here as far as post the pilot plant work, the studies. What would you envision here at this point in terms of what level of economic study do you want to do after that? And then just give us a rough outlook on what you would expect now based on a positive outcome moving through permitting and into development.
Yeah, look, we'll start with a scoping study because there's so many trade-offs we want to look at. Because we're running a pilot plant, it'll probably finish off once we can narrow the amount of options available to us. We'll probably finish at a feasibility study or pre-feasibility study in that sort of 6-month period, and then that'll give us the cost, and that'll give us our recovery numbers. So that's then likely to lead into a more advanced study. Now, whether we need to go back and run the pilot plant to get a little bit more information in various stages, we'll see. But then you're doing your more advanced study. You're taking your indicated to measured in your resource. You're doing a lot more work there. So by the time you run through the different study phases and get yourself organised, it's probably 5 years from now before we get into production. Now, I've said that to a number of people. I said, "Oh, that's a long time." I said, "Yeah, sounds like a long time, doesn't it?" But when you look at some of our peers in Namibia who got mining license, are waiting for the decision to proceed, and that's really just waiting for the uranium price to go a bit higher. They're still 2 years away. They bought their deposits. We discovered ours, so we're always going to be behind them because we had to go and drill ours out just after we discovered it. But 5 years is not a long time frame in the context of taking a resource through to development. And you look at the best uranium deposit in the world, NextGen have. That's now looking at what, 2030, somewhere in the 2030s, early 2030s to get into the production. They've been looking at it for 3 years. They've been working on this or more. So it's not, it just sounds like a long time for some people, but when you put it in context, it's actually not that long a period of time because, when some of your study phases take 12 months and then your construction phase is another 18 months, well, there's 2.5 years of your 5 years gone. And that's just one study phase. So you got to do your design. So really I could say to you, look, it's going to be 3 years, but I know I couldn't say that with my hand on my heart because, that's a very, very optimistic time frame. And, with mining executive used to say it back in the 2012 era when I started, they were going to be in production in 2014. None of those companies are now in production because the uranium price started to fall away. But I think it's probably that 5-year period is where we're thinking.
It's good to get a context on that bit of it, Murray, as far as how you guys want to advance this and market conditions and factoring in all those different things that are controllable, and then of course the uncontrolled things, which is a lot. The permitting side of things, finance, market conditions, a lot of these things can play into that. So I appreciate the comments on that. With that, I wanted to ask you, just going back to upgrade for a moment, what is your interest level with your guys' in-house process that you guys have worked on over the years? And of course, the market continuing to be increasingly have pressure on the supply side. What's your guys' interest level in using upgrade with outside development projects where Elevate basically collects a royalty or a stream to generate cash flows from the use of upgrade?
It's always been an option for us, but when we looked at that approach back in 2014, we had the Marenica project. It's low grade. The uranium price kept dropping. We've developed upgrade. What do we do with it? So we spoke to a few peers back in Namibia and thought, well, maybe we could run a pilot plant on their ores and sell the IP to them for either a royalty or a straight purchase. And we went down that path, but none of those projects are in production now. So we would have fallen over because we wouldn't have got no revenue and nothing happening. So we then sort of pivoted in 2018 and went, let's get control of our own destiny. You talk about what you can control and what you can't control. What we thought was, let's add it to increase our portfolio so that we can apply upgrade to our own resources and on a sort of almost a first mover basis where we've got the largest land position for nuclear fuels in Namibia. We've made 4 discoveries in a period from 2019. So 2 of those discoveries are now resources. We've got 66 million pound. A third one is Namu4, which we just talked about before. We're drilling on that with a maiden resource expected probably early next year because we keep finding more uranium. And then the fourth one, Capri, will drill next year. So four discoveries into 4 resources is a pretty good record, 100%. So we then thought, and then we expanded into Australia in late 2019. Unfortunately, the world went to shit, 3 months later, and we couldn't move anywhere, and we couldn't do anything with our projects. But now we're starting to do something with those. So we've now got 160 million pound globally. We're adding to that. And we know we can add further to it. We think that the big trigger for other companies will be the pilot plant. So we operate the pilot plant, which is something we can control. get the outcome from the pilot plant. And we know there's peers watching us. We know there's some predators hanging around looking for uranium at a reasonable price. So whatever happens will happen. But we need to prove to ourselves that upgrade works in this pilot plant, and that'll prove to our peers and investors that it works. And then, without being arrogant, Andrew, they'll probably need us more than we need them, because we have this large land position. We have a lot of resources to apply upgrade to. So, they were sitting back going, well, maybe we could add significant value to our projects with application of upgrade. Look what it's done in the pilot plant. So, yeah, I don't mean to be arrogant, but I think that, that's the critical stage for us, and that's where third parties will become more interested in what we've done and what we're doing.
Absolutely. I think that there's that potential. And then the various discoveries, certainly some of them are very close in proximity where they could be satellite deposits to existing operations. So you have that potential as well. And then, of course, yeah, once you guys demonstrate this out, that'll definitely be a milestone event for the beneficiation process and moving that forward. And then, of course, applying it to the various deposits. Of course, yeah, the land position in Namibia is quite large for any publicly listed company there. So well done on that front, and being able to consolidate some of the land position there. Plus, you guys now have your own deposits, so you don't have to rely upon anybody else to move forward. With that, on exploration, you mentioned some of the ongoing and upcoming work, Namib 4, as well as Capri. Marenica is also there, well defined. Any other things that you want to mention on the exploration front within Namibia that's coming up?
Yeah, look, we've got down in the Koppies area, as I said, we've got Namib 4. We also have got a tenement waiting for it to be granted. It's in Namibia, you go through an intention to grant, then you get your environmental clearance, and then they give you a full grant. We're just waiting for that environmental clearance on one project, which has got some drilling on it right adjacent to Koppies, so a little bit there. And also what we're learning from exploration at Koppies outside of Paleochannel and down at Namib 4, because predominantly the mineralisation down at Namib 4 is outside of Paleochannel. We're learning a lot to then apply to different parts of the Koppies area, but also taking that up to Capri and taking it up to Marenica, as you mentioned. So Marenica is a 61 million pound resource, but the grade is 93 ppm. We've used a cutoff grade of 50 ppm when it was, well, I say we, the company prior to me, estimated this resource. Now, what we're doing now is we're going through a validation process of all the data. It was drilled in the late 70s, early 80s, and then it was drilled in 2007, 2011 again. So we've been going through an extensive exercise of validating data, and that will then go into resource review, where we'll go from JORC 2004 to JORC 2012, but we'll also use a cutoff grade of 100 ppm in line with our other projects. So we want to see what sort of grade there is and what sort of pounds there are with a higher cutoff grade. Now, if it doubles the grade and, we drop a few pounds, that'll be a pretty good outcome. But we just want to see what that does for us and work out where to go. That could lead to that project being developed in a short period of time as well, because that's where we developed upgrade. We know upgrade is going to work there. So that could be something we run in the pilot plant some stage next year, possibly, and then maybe drill it out in indicated resource. And that could be a concentrate that fed down to Koppies, for instance. So there's that sort of thing that we're looking at. But also, Marenica, when we were looking around at sort of different basement, we found what we're now calling the dome. It's a large, I think it's about 4 kilometres in diameter. There's mineralisation. We've hit 13 metres from 8 metres below surface, so it's quite shallow again. And we've hit that on our current tenement, but we've also got the tenement just north of it, waiting for environmental clearance on that for it to be granted. There was some drilling on that by us, actually, pre-me again, and they dropped the ground. So there's mineralisation there. So we're going to really attack that dome in terms of exploration. We're doing a 3 or 4 week drill program at the moment just to see what comes out of it, to then work out what we do next year, how much effort do we put into further exploration on this dome. So there's potential there, and there's still a few other tenements we're waiting to be granted that we think have got highly prospective for discoveries and for potential resources. And look, Namibia cost us $1,000 a hole to drill at Namib 4. That's inexpensive exploration. So when we talked about the largest land position before, one of the questions I've had from investors, and particularly some North American investors, is, well, how do you service that land package? Well, at $1,000 a hole, it's fairly easy to service it. If it was costing us, if the Athabasca Basin is costing you $500,000 a hole, well, that's almost impossible to service this land package. So you need a big brother. But we don't need a joint venture partner now to do it. We can do it ourselves, and we can get, we can get, we're drilling 25 holes a week that are only 28 meters deep. So you can get across a lot of land. You can understand what you've got to you. And, if we want to go and do a resource drill, it doesn't take forever, and it's not an overly expensive process. So yeah, that's the other benefit in Namibia.
Absolutely. I think we've talked about this before, Murray, where you guys have that very good benefit. You have very shallow drilling, very cost effective there in Namibia. So it really, you can cover a lot of ground and assemble quite a portfolio, which you guys have on a land package that still has a lot more yet to do. And then also with that, you guys are likely able to advance Koppies ahead, but have quite a budget there working on development activities, but also with the cost profile there, you'd be able to explore in the meantime as well. So I think that's a good thing to be able to have in your back pocket. Looking forward to seeing more results come out of the Namibia operations and exploration work that you guys are doing there. Over to Australia, different cost profile, different location, different targets, Northwest Territory. Any updates on those projects and plans into 2026, Murray, as well as any comments on partner projects?
So we've planned a drill program at the Angela project. It's 25 k's south of Alice Springs, which is the second largest city in the Northern Territory, a very friendly uranium jurisdiction. We got delayed just waiting for some Aboriginal heritage clearance, which was never going to be an issue. But it's just one of those things you have to dot the I's and cross the T's to make sure that everybody's happy. And then we're expecting to drill sort of early November. That's about a 3 or 4 week drill program. So what the Angela project is it's a 31 million pound resource at 1300 ppm. So quite a significantly higher grade than Namibia. It's a sandstone hosted deposit that outcrops and dips to the west at 9 degrees. Now, we did some seismic work, 2D seismic work a few years ago, and we identified the lens that is mineralized, but we also identified a lens beneath it. Now, no one's ever drilled that lens. So we applied for a grant from the government to drill it. They gave us 112,000, which is a quarter of the cost of our program, which is good. It means that the Northern Territory is supporting uranium exploration in the territory. So we're drilling that. We'll see what comes of it. If that hits mineralization, that second lens, that's really going to open up this project to substantial growth and be quite exciting for us. At the same time, we have the Minerva project, 175 k's northwest of Alice Springs, so only 200 k's from Angela. It was discovered in 1978, I think it was, and hasn't been drilled since. All the holes drilled back then were vertical, air core. There's no structural information. 10 of the holes hit mineralization greater than 10,000 ppm or 1%, sort of, Athabasca type grades. So they're high grades, and it's only about 120, 140 meters below surface. So what we want to do is we want to drill it with diamond, understand the structure, to then work out what it is, to then work out how we're going to explore it further and add, head towards our sort of maiden resource on it. So that is going through the process now. Our geos are working on sort of heritage issues initially, and then the approvals process you need to go through in Australia. So when you talked about the cost differential of exploration in Australia versus Namibia. In Namibia, you apply for your tenement. They give you a provisional grant. You go, then get environmental clearance. You've got 12 months to do so, and then they give you a full grant for 3 years. So you can just go and explore on that. In Australia, you got your grant. You then have to put a environmental management plan in, a radiation management plan because you're dealing with uranium, and that takes a 6-month process. So, and then if you've got Aboriginal heritage clearance, it takes a little bit longer. So, in Namibia, it takes a bit longer to get your license, but then once you got it, you can really move. In Australia, you get your license quicker, but it takes a long time to get to drilling. So, 2 different sort of approaches to how things are done, and quite a bit more expensive, and also drilling deeper. I mean, of these 3 drill holes we're going to drill at Angela, there's 1,800 meters of drilling, so average 600 meter deep holes. So they're significantly deeper and more expensive than anything in Namibia. But if we hit uranium, as I say, at Angela, in that second lens is going to be fantastic. And we also get drilling next year on Minerva. That'll be great to see if what the mineralization style looks like, what the structure looks like, and where that structure might be headed, and how we explore that further. At the same time, we've got our joint venture partners just north of Minerva, and they're doing a little bit of work at the moment, but not a lot. And we've, as you said before, we divested the Uberguma project in Western Australia, and we're holding the Thatcher Soap project in WA. It's 11 million pound resource. West Australia is not that friendly to uranium at the moment, but we're expecting that to change over the coming years, given the demand for uranium around the world and the absolute need for carbon-free energy that nuclear provides.
You're looking at a whole different profile here in Northern Territory. Definitely, you have quite a substantial. It's elephant territory, as we well know. And then I like the Western Australia option, just in the sense that it likely does turn over, and definitely there remains to be interest in that area as well. You definitely see some transactions out there that have happened in the past here. So interest remains in West Australia as well. With that, why don't we talk just briefly here, capital structure update, Murray, on shares outstanding. Why don't you give us an update on that, the cash on hand, and how far you expect that carries with the planned activities budgeted, as well as the major shareholders on the roster?
Andrew, October last year, we raised 25 million, and half of that was raised through Paradise Investment out of Sydney. Sort of done a lot of investing in uranium. Presented them for the first time, and they took 9.9% of the company. So they're a cornerstone investor in that raise, and have been very supportive since. So this year we're expecting to raise in the near term, very shortly. There's a lot of reasons for that, a bit of strength in the market, and also we have got a lot of value add to do to shareholders, and having a few more dollars in the bank will really improve that value add scenario. The ETFs out of the US are the next highest shareholders, and our management and directors have 4.1%. We did change our chairman. Our chairman of 7 years resigned in February. We replaced him with Scott Perry. He's probably well known for his work in Toronto. He's an Aussie that came back to Perth. He bought $250,000 on market a couple of months ago. So he's just demonstrating that he believes in our story. $250,000 is a fair investment. So that's that gives us 4.1% in management. So we're very much aligned with shareholders and believe that what we're doing is going to add significant value to us. So we've got about 386 million shares on issue. Got a few options out there at various prices, mostly above 60 cents. And I think our current share price is in the high 30s. So as of the end of June, because we haven't put our September quarterly out yet, but end of June we had 21.7 million. I think it's going to be about 18.5 million in the end of September. So we've still got a fair bit of money in the can, but we knew that the pilot plant, the test work leading into the pilot plant capital cost and the operating cost of the pilot plant was going to be in the order of 8 million. So we knew that we were going to spend money on exploration with the funds we expect to raise. It gives us contingency for our current programs, particularly upgrade on the Koppies project, but also the Marenica project. It's a project we developed upgrade on. It's a project we know upgrade works on. We're just in the process of doing a resource review on it, validating 5,000 drill holes drilled in sort of 1970s, late 70s, early 80s, and then 2007 through to 2011 again. We've got a resource, a 61 million pound resource on it. We're actually going to bring that JORC resource up from 2004 to 2012. That will then, and we'll also use a cutoff grade of 100 ppm instead of 50. So we know the resource grade is going to increase. It's just a matter of how many pounds we've got at that resource grade. We then want to run, with this extra money, we want to run a pilot plant program on the Marenica ore. Well, then that'll feed into our technical studies on the Marenica project. So we'll have Marenica running just a little bit behind Koppies, and 2 projects on that development pathway. So we're quite excited about what it does for Marenica, because we know that it's, as I said before, it's a project that we developed upgrade on. But also, our brownfields and greenfields exploration in Namibia. So we've got 3 discoveries that we're about to convert to resource. I talked about Namu 4 going to resource early next year, but the 4th discovery, Capri, we want to go and drill that, get that into resource. So hence those 4 discoveries convert into 4 resources, which is a pretty good record, 100%. But also we're drilling around the Marenica Dome at present That's a new discovery for us and a new style of ore. We want to sort of do more drilling around that, understand that better. Moving across to Australia, we're drilling at Angela soon. If we hit mineralisation there, we don't just want to stop at that. We want to be able to follow that up. Also, the drilling at Minerva we've got planned. We want to accelerate that in terms of, okay, let's get moving on it, sort of put it in a bit of a focus, because we know there's 10,000 ppm grades from historical drilling. Let's go and hit those. Let's go and understand what's there. And also, the money gives us the opportunity to do accretive M&A. We've done a lot of assessment of projects around various parts of Namibia and Australia, and just we think that this will give us the opportunity to do a little bit of creative M&A, and that really consolidate some of our opportunities and consolidate areas of our projects. So Northern Territory becomes important to us, along with Namibia. So they're the sort of uses of those funds that we expect to get, and really add significant value to shareholders, not just through what we're currently doing, but through this program that we're planning to do. But we just wanted to make sure we had enough, because I said to the troops, there's more than likely something's going to bite us somewhere that we just don't know about. And sure enough, the shipping lines have been very unreliable, and pushed us 5 weeks behind schedule there. So that hasn't helped, but that's just why we sort of make sure that we've got enough cash in the can to do things, because we know that time delays, some of them are well and truly out of our control, and time is money. So if there's any other hiccups we have along the way in terms of the primary focus of getting the pilot plant operational and proving the process, so that it doesn't bite us too much.
Appreciate you walking through that. Paradise, definitely well known out there within the sector. Wishing you guys luck there to get the shipment over to Walvis Bay and at port and offloaded and out to site as soon as possible. Hopefully you guys can regain some of that lost time potentially here, maybe post-Christmas at this point. And on the capital side, definitely you also have to deal with market conditions, which are also very difficult to predict in this sector as well. With that, I wanted to ask you, you mentioned a little bit of the community work and community requirements in Northern Territory, but on the community work side, Murray, any items you want to mention between Namibia and Australia on the community work side that you want to talk about?
No, not really. It's I mean, we're some companies bang on about ESG, but we've always been conscious of the environment. We're operating inside a park, a national park in Namibia, and if you listen to this from Australia or North America, national parks are out of bounds. But we're dealing with a national park whereby you get maybe 10 millimeters of rain a year. It's a desert, and we just make sure that we look after the desert. The desert holds its history, so we rehabilitate our holes. We're careful not to make any new tracks if we can avoid it, and we use existing tracks. And we have a good relationship with parks, the national parks in Namibia. So, and from a social perspective, we're very much aware of the fact that we have to deal with the social side of it. But most of our exploration and projects are sitting in sort of a very, very arid environments where there's very, very few people living. And in fact, nobody lives inside the national parks in Namibia. So there's no one around from a social side of it. So you're only dealing with the social side where your office is, or where your warehouse is, where you store your samples, or where you're living. It's not so much inside the national park. And a lot of our peers in Namibia have been donating money to ambulances in different areas because there's not much around the area. And in Australia, we're dealing with projects in the Northern Territory that, again, there's a cattle station there, but so you have a good relationship with them, and an open relationship with them. So that side of it, and then the governance side, we know that we've got to be governance compliant, otherwise we can't list on the ASX and can't operate successfully. So we are very much aware of our duties, but we're also not in a high density population area, so it doesn't affect as much as it would in some other parts of the world.
Agree with you. I think that there's a lot of folks that do overdo the, if you want to call it ESG, or just good governance, or just good practice, or CSR for that matter, Murray, as we well know, the prior iteration. I think it's definitely good to acknowledge and deal with those things as needed. and ramp up those activities as needed. You guys are doing some conservation work with wildlife there in Namibia, which is great. And service providers, employees, new skill training, all that stuff. Definitely, there's a component in what you guys are doing, and then a growing component as you guys move into development. So I appreciate the comments on some of the things you guys are doing there and how you guys are approaching those. Well, Murray, short of anything else, I wanted to ask you about the market real quick before we wrap up. Any thoughts on the market as things stand here in October?
Yeah, it's interesting, isn't it? We see such volatility in the market, but I think when you look at the math and the uranium supply demand you alluded to before, the demand for uranium is just the story's getting better and better. When you listen to, I mean, since we spoke, Google, Meta, Amazon, Microsoft, all committing to off-grid nuclear power to run their data centers and AI. And I'm sort of, data centers, people sort of go, well, what's a data center and why we need it? Well, so many of us now don't have a server in our office. We go to the cloud, and I don't think we really know what the cloud is. I look out the window in Perth and it's a blue sky right now. There's no clouds. So people are sort of, I think they don't quite understand what the cloud is. And I actually went to NextDC's data center in Perth. That's the cloud. That's where we store that's where our servers have moved to. And they guarantee 24/7, 100% availability of data. They need to, because they sort of look after the police and the hospitals and not just the mining companies. So they actually have a diesel backup system there, sitting there, and that they've got, I think, 15 seconds of power backup, and then the diesel generators kick in within 4 seconds, so that we make sure that if we have a power hiccup, we can still access their data, which is absolutely essential, particularly when you get a power hiccup. So the world is going down this AI path as well, whereby I think I've heard the numbers like a Google search prior to AI being used versus now with AI uses 8 times as much energy now with AI. Now, everybody uses Google. Everybody does searches on their computers and their phones. That's consuming vast quantities of electricity that we really don't have. So, and I know that the Western world want to win the AI race. They don't want to lose it to the East. So they're having to put more and more effort into this. Now, some administrations around the world are committing to quadrupling their nuclear power. Now, whether that's achievable or not, it's demonstrating that they need to have power into these AI centers and these data centers. Otherwise, they don't function. Now, it hopefully doesn't get to the stage where you're deciding whether your elderly grandmother gets heating in her house or an AI center, a data center is kept open. Hopefully it doesn't get to that stage. We sort of work out very quickly that we need more and more energy, and we don't want renewables. When I say don't want, we're seeing countries with renewables are suffering badly. Spain were bragging a week before they had a huge blackout that they were on 100% renewables. A week later, they've got a massive power failure and everything falls apart. So you can't run power grids with renewables only. We sit back in Australia and we think we're pretty clever. Our government do anyway, and they say that we want to be self-sufficient in electricity. So we're going to go renewables. I said, well, that sounds great, but 84% of the world's solar panels are made in China. So are we actually self-sufficient? No, we're reliant on China to produce solar panels for us to then generate electricity. So we really, I think a lot of governments are either blind or blindsided or just got their head in the sand when it comes to power. But the smart governments around the world and through Europe are starting to turn around their policies on nuclear. So there's no doubt that the nuclear growth is going to be significant over the next 10 to 20, 30 years. And the only way to incentivize uranium production to meet the supply of that, or the supply to meet that demand, is to increase the uranium price. So it's very, very hard to see the uranium price sitting where it is for any period of time. Now, we have 2 peers in Namibia that are just waiting for the uranium price to move before they commit to developing their projects. Now, I don't know what their price is. Is it 85? Is it $100 a pound? What is it? Whatever it is, it's more than the current price. It's higher than the current price. So we've got this demand that's growing. We've got a supply that's not growing. And when you've seen, and the supply that has tried to grow. So you look at Paladin's Langer Heinrich, you look at Boss Energy in Australia, Peninsula, none of those have met their production. So they're not producing enough uranium. They're not producing as much as they're saying. So how do you incentivize supply? You incentivize it by increasing the uranium price. Now, I think there's going to be a point where the utilities who think, because we're probably our own worst enemies as CEOs. We go out and sell our projects and sell our company to raise money. So we're all competing for a dollar because none of us make money as explorers. We're also, we're raising money to get money in the door to do what we want to do. So we'll, not all of us, but some of us make sort of forward-looking statements that are probably a little bit more optimistic, let's just say, than reality. So utilities think, oh, there's plenty of uranium going to come to market. There's, no problems. But there's going to be a moment soon, an oh shit moment, where utilities go, the uranium is not there. We're going to have to get it. So they're going to start chasing it. The worst thing a nuclear power plant can do is run out of uranium, the nuclear feed. So where are they going to get it from? So they'll start jumping over the top of each other to buy it, and you'll see the uranium price just go stupid for a while, I think. And it's just a matter of when that happens. It's getting closer and closer. So it's I can see, and I've tried to look at this from outside the uranium industry because we're a little bit biased inside the uranium industry. But it's very hard for me to see that it's not going to happen. To me, it's a matter of when. So I'm very confident that the uranium price is going to go north, and we'll be producing uranium at a significantly higher price than we currently are in the near future.
Murray, lots of stuff to unpack there. Appreciate your comments on the market. Definitely, I think you and I both agree on where this is headed going forward here. There's going to be some bumps in the road, but some interesting information there. And definitely this market's very interesting from the sense of some of the things that have happened. Centralizing data, it's certainly not something you and I probably agree with. We prefer to have our control over our own data, and it's not the backup power that we're concerned about or the quality of energy behind that. It's the centralized control is the outstanding issue with that. While it's good for the thesis, don't get me wrong, it's a bit challenging with respect to the thought process. But folks will learn one way or the other. So I appreciate the comments on that. Certainly a lot of tailwinds. The amount of tailwinds that are behind us now compared to when, your time in the sector during the bear market, my time here as well, it's quite incredible what has happened here. So, and we'll stop on that bit of it for now. To wrap up, Murray, for potential investors who are listening in, the company has a market capitalization of about 162 million Australian dollars. Why should Elevate Uranium be considered within the institutional, family office, and retail investors' portfolio at this stage?
Well, we have a process that stands us out from our peers. A process that can reduce the mass to be leached, increase the amount of resource that is leached purely because of sulfate calcite I talked about before, and also a concentrate that can be taken off-site to a third party. So it's a process that provides us a small mass to leach, and a process that provides us a lower cost, both capital and operating, to develop these projects. So that's what stands out from our peers. And once we prove the pilot plan, I think the peers will be sort of watching us even more intently than they currently are. We've got a large land position for nuclear fuels in Namibia. We've got £161 million globally, so both in Namibia and Australia. So two good mining jurisdictions, tier one uranium mining jurisdiction in Namibia, third largest producer in the world, history of processing or history of developing projects, history of mining license granting. So we're in a great jurisdiction there. And with this upgrade process, we're going to add significant value to our assets. Some of our assets don't necessarily need upgrade, but will benefit greatly by it. So we're in a very good position in that. And I mean, you talked about bear market. I've been in this job for over 13 years now. So I'm not a newbie. I've been there around. I know what's happened, and I can see this cycle just going to get better and better in terms of the uranium price. And that's going to, I mean, all boats float in a rising tide, but you look for the boats that are differentiated from the rest, and that's where we are, differentiated with upgrade, differentiated with our large land position, differentiated with the fact that we're having successful exploration and converting those to resources. So really got a lot of growth coming forward over the coming year in particular, but beyond that as well.
And Murray, what is the best way for folks to contact the company?
They can contact me by my email address. It's on every presentation I put out. Email address is on it. There's a phone number on it. I always respond to emails or phone calls. So anybody's got any questions, please reach out and I can answer them.
Murray, well, we appreciate the time today. Thank you for the update. We'll continue to follow the company progress here. And of course, hopefully you'll come back more frequently in the future, and we're looking forward to having you back.
Thanks, Andrew. It's been good.